Hey, good morning. Yeah, it says 8:30. I should probably get going before that, but I've been running around doing a bunch of things, so I gotta make a new pot of coffee. So maybe we'll start at 8:22. What do you stink? Smell like a plan? This is cash price. Forecast. This is cash price. Forecast ZC extends rally as demand for privacy protocols surges.
Euro softens on weaker German trade. Scotiabank.
Brazil IPCA inflation came in at 0.48% below forecasts, 0.52% in September.
Mexico headline inflation registered at 0.23%, below expectations, 0.27% in September. Crypto today, Bitcoin, Ethereum, XRP retreat amid profit-taking risk-off sentiment.
Canadian dollar steady ahead of Bank of Canada. SDG Rogers' speech, Scotiabank.
Euro short US dollar remains pinned near lows as the attention turns to the Fed. US dollar charge yen likely to test 153.0s before a sizable pullback. UOB Group.
Investing live European markets wrap. Dollar gains fade. China expands rare earth curbs. US dollar consolidates recent gains as markets eye Bank of Canada, Scotiabank.
Japan's Takaichi highlights some early priorities, including stimulus package. The US dollar is little changed to start the NA session. What are the technicals saying?
Gold holds steady near record highs as traders await Powell's remarks.
Gold rally takes a breather amid Gaza ceasefire, Fed minutes. Despite some gains in global markets, mood remains cautious.
Hey, look at that. 822. No, Brian, I haven't been doing it while getting ready for launch. Yeah. Partially because there's no fundamental analytics. I've taken all that down. Yeah. Anyways, I think I got to the point where I needed to get last night. I think it was around 1 a.m. And so the next step now is to test it. So one of my goals today is to schedule a launch event. So I'll figure all that out, and we'll do launch day. So we're T minus something. All right. Let's go. Never met at the fact he's corrupt like a senator. Oh, wait, no, wrong speech. Let me remind you that trading and investing, risky, not appropriate for everyone. Past performance, good or bad, does not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And since we're going to use TRADARS and Trader's Way, with TRADARS we use past performance, don't we? That's what it is. But we're not predicting the future. We're analyzing the past to develop strategies and tactics. We're trying to understand what the markets are doing, not necessarily predict what they're going to do. We can quantitatively do that, but what's the interesting part about quantitatively predicting the future? Well, you're only kind of doing statistical analysis of the past and then doing mathematical projections, but it doesn't, you can't say in the math, oh, well, what if the Middle East finds peace? Right? What if there's an end to the war in Russia versus the Ukraine? What if the United States and China come to a trade agreement? So anyways, you can't, that's different, isn't it? Yeah. So welcome to my home office. I'm sorry it's a little messy. I've been grinding last several weeks, but like I said, TRADARS 2.0, I think, is 2.0 is done, and then the next thing to work on is 2.1 and 2.2. I got some aces up my sleeve yet, but the idea is we gotta move from 1 to 2. That's a giant leap forward. So I'm going to schedule a special event, and everyone can attend. And there's more advanced features for those that are already subscribed to traders.com. So you're going to get lots and lots and lots of upgrades and won't cost any more. But there are also several more affordable, if that's what you need, more affordable options as well. Yeah. Because I want everyone to use it. So anyways, so we'll go through our calendar. We have 3 minutes from not jobless claims.
What is trading?
But anyways, unless a number comes out, do they have like, does the government actually use automation or artificial intelligence to just do the work and post it publicly for us? Or do they literally need somebody counting counting numbers on a spreadsheet? You're like, you can't automate that? No, we count them manually. But so we'll see what happens in the next 2 minutes. Probably not a lot. And then we'll go through, we'll look at the markets. Okay. We'll go through the markets and see what's up. We'll do some technicals. We'll measure some things. And I trust you had a wonderful Octopus Day. Was it good, Jim? World Octopus Day? I certainly did. Actually, if I was an eccentric billionaire, I'd have I'd have a room, and on one side of the room would be a giant tank full of jellyfish. And on the other side of the room, I'd have a giant tank full of octopi. And the room would be dark and sort of back. Oh, I guess you got to have a shark too, huh? Shark Tank. All right. So here we go. 1 minute away. One minute away. Yeah, so in this drink, I got my kale and my radishes and my coconuts and my berries, and I think it's 2,000% vitamin C. So all my vitamins, all my minerals, all my nutrients, all in this drink this morning. And then in my coffee, now there's butter and bone marrow and coconut oil, and now 10 mushrooms all blended inside my coffee. What a world, what a life. I'm nuts. All right, so here we go. Click, click, click. 6 seconds. I wonder what's going to happen. We got Powell doing a speechy speech. Maybe that'll do something. And check, 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 nothing. It's funny, right? Check, 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 check. Yep, here it is. Vacuum. Yeah, vacuum. Yeah, well, how about them apples? Yeah, cool. Boo, 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 boo. Anything else? Are we expecting any vol? No, not till tomorrow's Canadian news. You, Mitch. Yeah. Kind of boring. Again, this is one of my favorite parts of the morning routine. Yeah, and none of this changes in our 2.0 process. So that's good. So that normal routine on this tab is there. Sentiment, fundamentals, technicals are still there. Training's still there. I'm going to move this and that somewhere else. But you know what? There's a new tab. So there's sentiment, fundamentals, technicals, and between technicals and training, I've added intelligence. So ponder that for a little bit. There's a whole new tab called intelligence. Yeah, Prince, I'm happy to do oil. Oil is one of my favorites. Why don't we just jump to oil? I don't mind. I'm here to serve. But what I was trying to show, Prince, is before you even look for something to do. Like it could be dangerous, not necessarily, but it could be dangerous to like log in and say, I want to trade oil. What I'm trying to get to is you, before you even think that, you've gone through the market, looked at what all the other assets are doing, and then decide based on market analysis whether today is appropriate for oil or not. Richard hit the nail on the head. That's where we get the AI thinking, yes. And there's currently two apps that it under the intelligence tab. And both are interesting because how do I put this? One can talk, not verbally, but how do you say then? One is conversational and the other app is visual. Both can think, of course, but there's different ways to receive strategic intelligence, isn't there? And I think there's going to be well, I don't want to that's a spoiler alert, Richard, but I don't know. Maybe. Yeah. Yeah. All right. So anyways, so I'm going to break the rule. Prince is like, "What do you think about oil?" Once again, not the right way to be thinking of it. Well, Brent's over here. Man, I have too many assets here. Where's WTI? Oh, come on. I missed it. No. Is it really on the first page? 10-year T note. What? Where's my oil? I got to do this a third time. Maybe it's a. I thought it would be here. No, I'm missing it, right? What am I doing? What's he doing? All right, I can't find it. I'm doing this obviously the wrong way during my live stream. Not very logical. And I got it here. So why don't I turn everything off? There it is. All right. Easy. All right. So we are bouncing around between, 62. We're hanging out at 62. So as you guys know, between 61 and 60 was our buy zone. Not that we were bulls, but that historically, meaning technical analysis, has been a place to take profit. We also know technically that there's a range around, I don't know, what was it, 68 to 70, in which there is a new sell zone. And we've been playing that for a while. Now, in 2.0, I have a roughly developed, we'll call it a beta version of an oil analysis page, oil industry, global energy complex page that actually looks at a bunch of databases. So imagine this, that we have AI that talks to the energy agency, energyinformationagency.gov. So we're tapped into their database. We're tapped into OPEC. We're tapped into the World Bank, and we're tapped into the IMF. With these four sources, we are able to gather data and organize data and format the data and then pull it all together and aggregate the data and analyze the data and look at things like oil production, oil inventories, seasonal demand, seasonal supply, and also future projections. So like I said, the past performance does not predict future results. So how do we handle that? Well, OPEC has an outlook. The U.S. government has an outlook. The EIA has an outlook. Okay, great. For the future, what is next year going to be? So you have those government agencies, but then you have the World Bank and the IMF who will also predict what next year is going to be like. Now, they all use different philosophies in their predictions. They use different data sets. They use everything is different. Okay. But we can take all this data and think about it and then actually have oil price predictions based on this quantitative analysis of what these different agencies are predicting. Isn't that neat? That's pretty smart, isn't it? Well, that's what I used to do personally. Now I've taught AI how to do it for me. I still need to know why I care about this stuff. And so now I can say, oh, what would, how would I think about the future for oil prices? But now I have a machine do it. To say, hey, Wayne, this is what you'd be thinking. I'm like, cool, right on, because I need that information. You can't replace me. AI is stupid, by the way. I think it's overhyped about being brainy. I think AI is dangerous because it is stupid. I am shocked how dumb AI is. But if you train it properly, it'll do those things fine. So if I say, well, this is how I'd look at all these variables and teach it, then it can say, oh, well, I'll look at all those variables for you. I'll gather all that data and then I'll plot it and make charts and then do, projections. And then I'm like, well, when you do the projection, do a linear projection with the standard deviation using these calculations. In fact, calculate 2 standard deviations and go out 6 months in advance and go back 3 years in your data set and make sure to incorporate commitment or traders report, right? And all of a sudden I can add all those layers, but it's the brain, the human brain, that's doing the thinking. And AI is just pure grunt work, but it's helpful. Yeah. Cool. So what does this tell you? Not who asked this? Prince Ben. Okay. Well, right now oil's going nowhere. It's an uptrend on the hourly, but we're quite neutral because we made a lower low and kind of a double top, maybe even a lower high, and then so we have a consolidation type pattern. Up is okay. Down could be, like let's put some geopolitics into this. It seems like we have a resolution to the Israeli-Palestinian conflict, or I should say, Israeli-Hamas conflict. Okay. So if that brings peace in the Middle East, well, 2 things could be interpreted. General increase in productivity, although that part of the world isn't that crazy productive. So that increase in productivity that peace brings, the peace dividend, could be increase in oil production. Just peace in general. And then maybe the next focus is settling issues with Iran and then bringing Iranian oil into production and into the market and that kind of stuff. And that's just more oil flowing and oil prices down. If you're a bull, you're probably looking at it as a giant increase in global GDP. And I'm like, well, probably not. I don't think, no. So you have to say, is this going to be a demand issue or a supply issue? And peace isn't less supply. Peace would be increase in demand, but is the Israeli economy going to double? And even if it did, is it going to move global oil prices? Probably not. So I think it's going to be much more of a supply issue. Less problems, more oil to the market. So that kind of says down, but I'm already a bear. You know that. I've been a bear for, since Canada Day? So anyways, so sell high at 70 was the last thing I said, and it dropped to 60. Hey, $10 is a huge move. That's 1,000 pips if it was euro dollar. So this tells you Thursdays are not amazing days for trading oil, but it's the right time of day. This is the right time. So if you were going to do it, what would you do? A bull? Well, see, I'm a bear, so I would kind of look at the 1 hour, 4 hour around 63 as a potential triple top. And so around that, I would look for a rollover and take it back down. That's how I'd look at this implied volatility. Okay. But, and that's a big but. Okay. We know it's the right time of day, but the wrong day. Okay. Where were you on Monday or Tuesday? If you were going to buy it at 60, you should have done it on Monday. Now we're at 62, approaching 63, and today and tomorrow is probably a take profit, fizzle out day if you're just doing this quantitatively. Now, geopolitics could change all that, but we'll see. And, right? And this will fizzle out in a couple of hours. So, to me, lack of volume and volatility usually doesn't mean up. It means not up. Doesn't necessarily mean down. But right idea, right time of day, wrong day. So these are really more like swing trades. Let me put these other things back. I'm gonna run to you. Yeah, I'm gonna run to you when the feeling's right. Sorry, I'm Canadian. I love you, Brian Adams. Hey, you're supposed to, before you even, oh yeah, that's right. I don't I don't have fundamental analytics. Yeah. Yeah, so we'll stick here. What I was going to say is, before you even think about oil, Prince Ben, you roll through the fundamentals to try to measure what the market is actually doing.
Gold holds steady near record highs amid Fed.
Okay, and say, should I be trading oil? And then drill down. So I like to look at multiple markets. So our new risk gauge, page, you know, the one that looks at what the 8 markets are doing on 3 time frames. That is completely 100% rebuilt with many more data sets, much more analysis, and 4 layers. It's a lot of what we're doing is 4-dimensional analysis. So that's really going to be something. And so you look at that, and so imagine this, Prince. If you looked at all the major markets in the world, including things like junk bonds and the shape of the yield curve, like, think how complicated this stuff is, huh? And based on what junk bond traders are doing and treasury traders on all sides of the curve of, you're looking at long bonds, you're looking at 3-month, even 1-month yields, and you're looking at changes in COT for those yields. So now you're analyzing price, but also positioning. Like, dude, this stuff, oh my God, wait till you see it. But my point is, Prince, you look at it and it says, I've looked at, I'll just say 100 different variables of what's happening in the market right now. And Prince, it's neutral. So Prince Ben, you wouldn't immediately then say, oh, I want to buy some oil. No, you should say, oh, today is a cautious day. And then if you're like, well, I'm still going to do my analysis on oil, which would be part of your routine if you trade oil a lot. And then you look at the implied volatility tool, and you pull up WTI like I did, and then you see the fact that it's consolidating and that today is not even a good day for trading oil. And now it all makes sense. Everything is right as rain. The market's neutral. The price is consolidating, and it's not a good day in general for that asset class. So you're like, well, I'll check it out on Monday. No, nat gas is not the same. Nat gas is very, 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 very different. Look, at Investor Bootcamp. It's $88 a year. I think I have access. Yeah. $88 a year for everything, including my charts and the training videos. And then probably page 2, the oil trading course. And then you go to, where's the geology of oil and gas? No. Upstream? No. Fracking, tar sands, how to refine. So this is an hour and a half of how to refine oil into different products. I cover nat gas in great detail. I guess it's this one. What? But that's not the last. That's out of order. What the heck is going on there? I think that's out of order. Let's see. How to sell gasoline. Yeah, this is slightly out of order, isn't it? Isn't that the last one? I don't know why that's changed. How to drill, the geology, intro to the oil. No, I think it's probably this one. So it's a shorter one, 35 minutes. Okay, so I'm going over the choke points here. Then we've
Answer that.
think I go over nat gas. Anyway, somewhere in the course I cover it great detail. So let me just get to the point I'm trying to make here. First of all, that one course is worth $88. So imagine 100 hours of training like that. But anyways, how do you say this? Oil, when you pull it out of the ground, is a liquid, and therefore fairly easy to transport. Right, Jiverme Silver. You can put oil, you can pull it out of the ground, and you can then have trucks come and get the oil and bring it to a refiner or a distribution center. You could build pipes that take the oil to other pipes that take the oil to other pipes that then take it to a distribution center. You can put oil on ships and transport oil all fairly easily, right? So oil can be moved around the world with ease. So therefore you get a global oil price. Because ultimately you don't know if you have Russian oil in your Ford F-150 or oil from Malaysia. Okay. Most likely you have a blend of Canadian oil and American oil, and the difference is viscosity. Okay, great. But gas is gas. And when I say gas, I don't mean petrol, not the stuff you put in your Ford F-150. I mean gaseous natural gas. Okay. So it comes out of the ground as a process of, as part of the drilling process, because it's not just oil at the bottom of the ground. You know, when you drill down, there's oil, but there's water and there's gas and there's a bunch of other things. It's just a gobbledygoo mess. And so back when I was a wee lad in Kenyatta, knee-high to a grasshopper, they would just burn this natural gas off. They'd burn it. So It would just, you drill into the ground, and a byproduct of drilling would be gas. So you kind of funnel the gas out of the way, and then you can't just pollute the environment with it. So you burn it, and it just burns like your barbecue. Now we captured. Okay, great. Now here's what I'm getting to. Well, gas is like air. It takes up a lot of space. It's not a liquid. Okay. So to transport it is a bit of a challenge. And so when it comes to natural gas used as energy around the world, if America is going to sell its surplus natural gas to Europe, who has a deficit of natural gas, it's not that easy. You can't just fill an oil ship, a container ship, right? Not a container ship, but an oil ship. You can't just fill it with air mixed with natural gas. You'd get there, and it'd cost you $10 million to transport enough nat gas to power your barbecue for a week. You wouldn't pay $10 million, right? So what do you do? So now you got to transport the gas through a pipeline, and eventually it gets to a facility designed to compress it into a liquid. And there are things called trains and all these things we don't need to get into, but the point is you get it really, really cold, and you squeeze it really, really hard. Okay? Pressure and temperature. And you convert it from gaseous state into a liquid state. Now, that's a lot of science and money. Then you have to put it in a specially designed ship that can maintain the, I don't know what it is, 100 degrees below zero and extremely high pressure. Oh, well, that's a fancy pants boat. Yeah. Then you can take it all the way to Europe and say, hey, Europe, we got a boat full of liquid natural gas. And they're like, cool, because we need that because we don't want to use Russian natural gas. So we're happy to have, some natural gas from Texas or Louisiana. Great. So then you got to have a specialized plant, almost the exact twin of the one that compressed it and cooled it. Now you have to uncool it and uncompress it and then turn it back into air that burns and then put it into your new pipeline so it can power the Porsche plant in Germany with electricity, right? So it goes to an electrical power plant that then uses it to burn, which then uses that to create electricity. And now they're up and running making Porsches again that Chinese people don't want to buy. Yeah. Sales of Porsche this quarter in China is down 25%. And it wasn't good before. Okay. Yeah. So anyways, what I'm getting to is there's a big thing that I make in the training course. When it comes to oil and oil prices, that's why I think a lot of discussion, I think, is in the distribution. So I talk about in one of the lectures, I talk about the distribution of energy, and we look at the maps and everything across the United States. And then there's the pricing of energy. And a big distinction I make in that lecture is now that you understand the energy complex, when it comes to prices, because very often the government will say it's the greedy oil companies that are raping and pillaging good people because they're greedy. No, that's actually quite dumb. So now when you take the course, you actually know the pricing mechanism. And let me make a quick distinction here. The oil you pull out of the ground is pretty much, I mean, there's chemical differences, but I'm talking about raw crude that has not been refined yet. Okay? It can go all over the world, and it's pretty much the same stuff. The refineries are the ones that refine it and turn it into a product. So some oil is better for gasoline and diesel, and some oil is better for plastics and tar, and some oil is better for jet fuel. But with chemistry, we can crack all that and refine it and blend it. And so ultimately now, because of advanced technology, your oil is ubiquitous. So nobody cares where your oil comes from. It's oil. And you don't buy raw crude, you buy gasoline, or you fly on a plane that has jet fuel. So the only people that are the only buyers of crude oil are refineries. You buy the products that they make. So I take you through how they actually do it, and you know the difference between cracking and fracking. Right? They're not even close to being the same, right? But anyway, so all right. So you got that ubiquitous. You don't know where your oil came from, nor do you really care. But natural gas is quite different, and therefore it's very, very, very locally based. Okay? No, actually, the United States is the only country in the world that buys Venezuelan oil. The United States loves Venezuelan oil. Yeah. All right. So here's the thing. In the natural gas industry, Jeremy Silver, in the natural gas industry, you could have nat gas. I'll make up some prices here. Let's say in the United States it's $3, and in Europe it's $11. And natural gas is natural gas. So you can have a much different, okay? You can have a much different scenario where when it comes to oil, there's typically a spread difference in price between Brent and WTI, which is American oil and global international oil. But what you don't see is like WTI is $50 a barrel and Brent is 110. Because you would not hedge, arbitrage the thing, and you're like, you know what, I'm just going to buy this cheap oil, and then demand for the expensive oil falls, right? So now the expensive oil falls in price, and demand for the cheaper oil increases, so it raises in price, and suddenly the spread narrows, and you get to a fair market value for that oil. That's what arbitrage is. But it's not that easy when you can't transport natural gas easily. Then you get different prices. And so you can have U.S. oil at 3, natural gas. You can have 3 in the U.S. and 11 in Europe, and there's not much you can do because it's going to have multiple prices. And when it comes to oil, because of its ubiquitousness, there's the law of one price. Of course, I cover this over like 16 hours of explaining the oil industry. Hey, if you want to be like truly educated in the oil and energy global complex, everything from the geology to the technology to the process of drilling and fracking and refining and the distribution and pricing and legal and retail selling. And if you want to be an expert in everything oil and gas globally, my course is 16 hours, I think, and it's just one of 100 hours worth of training for $88. Like, I mean, it would be really ridiculous if you didn't do it. Oh yeah, so you need the refiners and facilities. So you need facilities at both ends. Okay, you need to well, first think of it this way, Jiver Silver. You got to get the oil out of the natural gas out of the ground. Then you have to transport it to some, let's say temporary transportation to more of a transportation hub. And then you got to get it to where it's going to go for international distribution. So now you get to water somewhere, and there's a facility there to then take it and compress it and freeze it into a liquid. So that's a heck of a process. Then you got the specialized ship. So all that has to be built. All that is super technology. I mean, think of it. It's a pressure cooker on a boat, but it's not a pressure cooker. It's a pressure freezer. It's crazy technology. And then when it gets to where it's going, so let's say Europe, so it's going to Amsterdam, now they have to have the reverse facility. So all of this needs to be built to change it from a liquid back to a gas. All of this needs to be built into the supply chain. Yeah. Just fabulous technology. Fabulous. The energy industry is absolutely amazing. I mean, I worked at NASA, right? NASA puts people on the moon. NASA has done amazing stuff. The oil industry is maybe even more complex than NASA. Yeah, accidents, and because the media is super hyped up too. So if there was going to be an accident, look, if you build it, there's going to be an accident, right? But whatever, there's accidents all the time. Like a self-driving Tesla runs someone over who's riding a bicycle. That's terrible. But humans do it 100 times a day. And one Tesla did it once, and now you're like, we can't have self-driving cars. You know what? That self-driving car is better than every driver in Atlanta. Because the drivers here are stupid and dumb and reckless. Yeah. So I'd much rather have millions of self-driving cars than millions of idiots with cars. Right? So anyways, so there's going to be an accident, but it doesn't mean it's bad. But the other thing is with the other form of energy that I'm very interested in is nuclear. And imagine you're saying, well, I owned a Betamax, a Betavision. Does anybody know what this is? A Betamax machine? It was technology that almost worked. I mean, it worked. In fact, it was better than VHS. Yeah. But VHS was cheaper, and therefore it won. So this was a device that read magnetic tape and turned it into visual and audio on your television. Yeah, a VCR, but it was different. VHS was lower level technology. Okay. All right. So imagine you were talking about what would a fair analogy? I feel like the analogy is not amazing, but okay, let's say you're a man, you were trying to measure or analyze media today, both content wise and quality wise, the sound quality, the visual quality. So you're sitting in your room, in your great room, and you have an 80-inch 8K TV. You have a 7.2 surround sound system, and you want to watch a movie. Great. So you pop in your Betamax cassette tape, and you put it in, and it's 280p. Not even, wouldn't be P, it would be I, it'd be interlaced, right? 280i. And yes, kids, there is a difference between 1080p and 1080i. And you're like, I've never even heard of the I. Well, the I became before the P. So anyway, so you're taking this technology from 1980 and you're trying to say, well, it sucks, so we shouldn't have 8K TVs. You shouldn't have 7.2 surround sound systems. By the way, this guy I know has 8 subwoofers in his movie theater. 8. How does that work? I don't even know how. So he has to have a special processor and whatever. So anyway, so you're saying, well, if you look at the Betamax in 1980, having an 8K TV with incredible sound is worthless. So you shouldn't do it. So therefore, we should get rid of our 8K. You're like, what's 8K? I only have 4K. Yeah, well, they make 8K now. Okay. So anyway, so get rid of all this advanced technology because there's no use for it if you have Betamax. I think this might work. Okay. So based on technology of 1980, the society in many parts of the world, especially the United States, are terrified of nuclear power. They're terrified, and they don't even know why. And they're like, well, didn't something blow up somewhere some time ago? Well, Chernobyl. But in 1980, whenever that was, it was already bad technology. Oh. Well, what about 3 Mile Island in the United States? Yeah, what was that? 82? 79? I don't know. Yeah, and it almost melted down. And it almost released radiation. What about Fukushima? Well, they built it on a fault line. I would suggest not building it on a fault line. But it was there for decades without a problem. And it also was old technology. Oh, okay. So where I'm getting at is it's not fair to say Betamax is low quality. It doesn't have surround sound. It doesn't have high visualization. So we should never build this other technology. No, no, no. The core technology can change. You can go from Betamax to VHS to make it the distribution wider so you get more content. And then you can move to, remember the big discs? And then you move to DVD. And now we're just digital. And so now we can use better and better stuff. When it comes to nuclear, we're going through this renaissance. If you think of it from a venture capital point of view or a technological point of view, there's nothing even remotely close between the science of today's nuclear power plant and tomorrow's nuclear power plant versus what happened in the 80s. But government refuses to build nuclear because society is so afraid of it that it would make the politician maybe look bad. I mean, I don't understand that thinking, but whatever. So the politicians aren't for it because society is afraid of it. Right? Lucas says, I'm looking forward to the molten salt reactors. Yes. So in that case, you take the same idea of how do you keep the reactor cool? So in traditional, what you would know as a nuclear power plant, we use water. Great. Well, the boiling point of water, even under pressure, is pretty low. But it's decent at cooling things, right? But it boils even under pressure. Now, when you put it under pressure, the boiling point actually goes higher, but whatever. So the reactor makes the water hot. And what happens when you boil water? It turns to steam. And what is steam? It takes up more space. So now it creates pressure. So now when you build a nuclear power plant, it's like a pressure cooker again. And there's so much pressure that it requires incredible tolerance in the way that you build a nuclear power plant. If there's a microscopic crack that even the human eye can't see, you have to tear down that part of the nuclear power plant you're building and rebuild it. Every screw, every ounce of concrete, every piece of metal has to be at the extreme high tolerance. So building one of those things is nearly perfection at a microscopic level because the smallest crack will just explode the whole thing, right? And that's a bad thing. That would be bad. You don't want your nuclear power plant to explode because of the pressure blowing out the crack into a hole, right? Makes sense. But therefore, building a power plant takes a nuclear power plant using the old technology takes a lot of time, takes a lot of oversight and compliance by government agencies. And there's often build up, tear down, build up, tear down, build up, tear down until it gets 100% correct, which means these things start out at many billions, but by the time it's done, it's years behind schedule and many billions over budget. But then you finally get it done. And then everybody says, well, not in my backyard. So now everything's a problem. Okay? But for good reason, because if you do it wrong, it's dangerous. Okay. Lucas says, molten salt reactor. Well, the nice thing about that is the molten temperature of sodium is high enough to keep the rods in the reactor cool, but at ambient pressure. So molten salt doesn't turn into steam. So now you can build a similar power plant, and instead of cooling it with water, you have liquefied salt. It's salt that then turns to magma, lava. So just think of it as lava. Lava's hot, not as hot as a nuclear reactor's rods. So it'll cool down the rods from, let's say, thousands of or million. I don't know. Let's just create a silly example. Millions of degrees down to thousands of degrees. They're still hot, but they're okay. And so whatever the temperature of lava is, that's what the new temperature of the rod is. But the nice thing about the nuclear power plant that cools it up down to molten temperatures, molten salt, lava made out of salt, not ground. The cool thing about that is it's at sea level pressure, at ambient pressure. Why does this matter? The rest of the nuclear power plant's pretty much the same thing. It's only replacing water with salt. Well, there's no pressure. So imagine all you need to do is build an enclosed swimming pool. It just needs to hold the liquid. There's no pressure. None. Well, hell's bells, you can knock that out. It's just a bunch of reinforced concrete. You just knock that out. Instead of taking a decade, shoot, you can build that sucker in 18 months. And it'd be cheap. Yeah. What's the likelihood it's going to blow up? It's not going to blow up. There's no pressure. It's no longer a bomb. I still wouldn't put it on a earthquake fault. Okay. But there's just no pressure. You see? And so that is one of maybe, I would say, a minimum of 100 designs that are being researched. And we're going to go into this nuclear renaissance, or we've even started this nuclear renaissance, where there will be, let's say, 100 different new technologies, and we'll test them all around the world, and through natural selection, we'll get it down to one or two technologies that we love and trust. One of the ideas that I had was when I bought this house 100 years ago, it had 4 hot water heaters or something. I'm like, what the hell is this crap? So I had all the hot water heaters removed, and they're just big white cylindrical things, right? And I put in a commercial grade tankless water heater, but it has to be, it's so big and powerful, it has to be set up outside. So now I had all this extra space down in that basement area. But it made me think, like, well, what if I use that space now instead of heating hot water? What if we had some hydrogen fuel tanks that would look a lot like these hot water heaters? And so what if I had hydrogen making electricity for just my house? Because I don't need that much. Okay. So it should be able to make enough electricity just for my house. The output is perfectly clean water. H2O comes out. That's the waste. So obviously I can just pop that into my water line. So now I'm using less water, or I use it for irrigation or something like that, right? And now you can take down all the power lines in the neighborhood. And now you don't need a nuclear power plant 110 miles away that have then transportation lines that take you down to the lower lines, right? Transformers, and then take you down to other transformers. And then you have to take it down the road through your community, down your neighborhood to your house, or to the front of your house, and then to your actual house. That's a lot of wires. Wouldn't it be cool if every house was just independently powered by something that generates fresh drinking water? And you don't need a grid at all? I kind of like that idea. When I was a venture capitalist, one of the things we invested in was a technology of being able to spray on a solar voltaic cell. That's fancy as those black glass looking things that people put on their roofs to collect solar energy. Imagine you could spray it on. How much cheaper? So it was designed that it could be ubiquitous. It could just be put on all houses and people wouldn't even know or even care. But you'd be collecting energy. But what about third world countries that are watching Baywatch and cooking dinner in their shanty town with a bunch of Honda electrical generators running all day? Well, they cause a lot of pollution. Well, what if you could just spray on a solar panel on the top of their fabricated house? So anyways, cool stuff. So why don't we do some charts? So the other day we were talking about, again, that you should be building baskets, in particular carry trades. And so yesterday I threw down an order, and I threw down an order. This trade I've already been in for a couple of months. Just to say, look, this is how you do it. When I say you should consider it, this is how you do it. So I threw one here somewhere between the 21.55. I missed it by 2 shakes of a lamb's tail. You see that? It should have been here, but I had it here. Oh, dang it. But I should have, could have been in that, and I'd be making money, right? Okay. This one I've been in for months. But I did catch the peso. And my stop is already at break even. Now, I moved it a little bit quickly. I mean, I typically would probably still leave it here. But now that I'm in it, we can talk about it. So I'm a bear. I have been for a while. And we've gone through a period of consolidation, so it's time to wake up. Okay. And you'll see that I basically sold it near the daily 21 in a downtrend. Okay. After triple confirmation of a roll reversal. Okay. Whatever. And my fundamental bias is US dollar bearishness. Okay. Fine. Whatever. And so let me get my drawing tool. Okay. The general thought process is this. You see what I ended up doing? Okay, so technically it's all right. On this time frame, it's fine. I'm short on this 21 for sure. Okay, in a couple of days, especially if we're touching this area, I will have that at break even. Great. So what's the point of a carry trade? So now let's analyze this. So yesterday, I got more than $1. So these 2 trades, you'll notice I'm in it $200, 2 trades, $200. So let's just say this USD Mexican peso, I have $100 of cash. Okay. Thank you, Traders Way, because they already paid me the $1.36. So let's just say I earn $1.36 a day. That may or may not be true, but whatever. Okay. $1.36 times 365. 500. How much money did I risk? That's why I looked at margin. How much did we say I had risk in actual cash? $100. If I stay in the trade for 1 year, on the 365th day, price comes back and knocks me out at break even. So I made 0 pips in 1 year. I will still make 500% internal rate of return. Thank you, Traders Way. I love you. So now my goal is, I don't even care about the pips. I just want to sit on it. But then that isn't true in real life. So we go back to this trade now. I've been in it since August. And I have $61 in swap, which is pretty good because that's 61% internal rate of return on my margin. But check that out. But I have 480. You're like, wait, what? 480? Pretty soon you don't give 2 hoots about your 62. So now I can say, well, give me my money now and I get my 500% return on internal rate of return, even though I've only been in it for August, September, we'll say 2.5 months. Now I can just take my pips and say, well, it's the same. I'm indifferent. It's the same as sitting in it for a year. Well, imagine if I could sit on it a year and I get that $500, but on the swap, it's possible I can be up thousands of dollars in pips. So it's when you think of building portfolios, okay, when you're thinking about portfolio construction and management, the mindset's very different than day trading and scalping. And your concerns, if you will, your stress comes from somewhere else. And I've talked about this before. When you build a portfolio, you're not stressing at night while you're trying to fall asleep. You're not stressing about the money you're losing. You're stressing about the money you're making. Because you're like, well, I'm up $62 in swap, but $500 in pips. So now you're sweating bullets over the pips. Now, all your bad trades have been knocked out as tiny little losers. So if this comes back and knocks me out, I'll either take this loss or like I had before, I had it at break even. What if it comes back and knocks me out of break even? Well, you have lots and lots and lots of these pissy little losers, but you're letting all your winners run. So after time, you have a boatload of pissy little losers, but then you have a fair amount, whatever that is, several to dozens of trades that are just running and paying you interest 7 days a week in cash. Okay. So, yeah, right. So anyways, that's how you do it. So I should be in 2 more winners today, but I missed that last one by 2 shakes of a lamb's tail. So got close, but no cigar. $1.36. Right there. Okay. Now that's on my first day, and I only have $100 invested. Okay. You see? Yes, this is my Trader's Way account. So think of it this way. In 100 days, I'll have no money at all risked on this trade. So now, can you sleep at night knowing that your break even is 3 months? Because you have $100 risk, and in 100 days, you'll have $100 in swap. Your stop's at break even, and you've already been paid back for the money you risked. 1% a day, every day, forever, or until you get knocked out of the trade. So maybe you can stay in it for years. I don't know. And it's funny because when you speak to new traders, they don't think this way at all. They're thinking hours, if not minutes. And I'm like, have you ever thought about holding a trade for 3 years? Like, the first stock I ever bought was Apple Computer. I bought it for $6 a share and held it for 30 years. Well, that's not quite true. 25 years. Yeah. 25 years. Not 25 minutes. I did well on that trade. I bought it when it was nearly bankrupt, and I sold it as the biggest company in the world. That's a pretty difficult one to replicate. Hey, I only buy bankrupt companies I think will turn into the largest company in the world. That's my strategy, everyone. Well, the funny thing is I did it. I'm not sure if I'm going to be able to do it again. Yeah. Well, Sebastian, how do you want me to answer that, technically or fundamentally? Are you going to do a pattern recognition? Are you going to do a fundamental analysis? Are you going to do a seasonality? So do you know, Sebastian, what euro dollar does almost always in the month of October? I can't prove it to you right now because I've taken our old fundamentals down and I'm releasing our new fundamentals. Okay. Well, before I even get to the fundamentals of what is, okay. So, like, for example, this is the position for these assets here, long term. Here's the short term flow of these assets. So here's gold, and here's gold. Gold, week over week, gold total. Okay, but what if we were able to then look at this and say, well, what's the trend in this data over 20 years? And that's what I'm talking about. Now, you're saying in the last 20 years, euro dollar falls? Where are you finding that data? Well, you say in the average of 20 years, it goes down for October, November. So explain that to me, Lucy. Are you still talking euro dollar? Yeah, yeah. Okay, but where are you getting that data? Where are you getting the data? So I've built in this new feature that you can erase everything if you wanted to. Cool technology, right? Yeah. All right. All right, let's do some seasonal candles. July, oops, July, August, September, October, November, December. Oh, you lost the internet. Yeah. Okay. Where, where are you getting this information that October and November slight chance down? Okay. And I'll label this. So this is July, August, September, October, November, and December. So, what many people will say, and I'm going to assume maybe you're doing the same thing, you believe October is down because you're like, well, look at it. It says down. No, it doesn't. No, it doesn't. And you might say August is up. No, it isn't. And so this is where either having a coach like myself or our new coach, Aiden, who can interpret this for you. And this is what it means, and this is what it means. So, yes, October may be down, and let's say November is break even. This one is a little positive. But that's absolute versus relative. Okay? So, I don't have the data in front of me either, because I've taken down our seasonal data, although our new seasonal data is just crazy. But nonetheless, that's how I would read it. And in my mind, from experience, I'm a buyer of euro dollar this time of year. Okay. So it's way too simple to say this means up, this means up, this means down, this means down, this means up, this means up. No, no. No, 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 no. So one of the things that we have in Traders 2.0 is if you have the proper subscription level, if you want a cheap version, it'll just show you all the data. But now you might make a mistake like Sebastian and say, well, this means down. No, it doesn't. Okay. So a higher level will either have me to explain it to you or have Aiden explain it. Now, Aiden is our artificial intelligence. You get it? Aiding traders. Aiden. He's helping. He's aiding. Aiden. AI. AIDEN. Aiden. Helping. Providing aid to traders. AI. Aiden. Okay. Cool, right? So there, for those members, there's quite a few places throughout the website, almost all pages, will have a little button kind of like this one. There's slightly different variations, but just imagine there's a button that says Ask Aiden. Or Aiden, Aiden report or Ask Aiden. There's quite a few different variations. But imagine now you click that button and it gathered a whole report based on the asset you're looking at. And it'll analyze not just the seasonality when you're on the seasonality page, but it'll analyze the COT, it'll analyze the charts, it'll analyze the seasonality, it'll analyze the next month's seasonality in the future. It'll break things down week over week, not just month over month, and try to show you mathematically where in the month this turning point goes from bearish to less bearish to bullish. And for now and in the future, you see, and generate using technical, fundamentals, seasonal, institutional, current, and near future analysis, put it into a report for you, and then very clearly say whether this turning point is very bullish, neutral, bearish, or very bearish, and why, and give you a confidence score. What do you think of that? Oh, thank you, Andrew. Yeah, and bigger, more important to me than being right. Dude, I'm a trader. I'm right often. I'm wrong sometimes. So I don't care right or wrong. Making poor decisions or getting the timing wrong of your investments is just totally, absolutely normal. So right or wrong, I don't care. But sharing the idea of, hey, retail trader, have you ever thought about trading like an institutional investor? Have you thought about long-term patterns in trades and trends? Have you thought about the macroeconomics that set these things up and make these assets move and behave the way they do? Have you thought about earning income, not just earning pips? Have you thought about building and constructing a portfolio? That's the message I'm trying to get across. And then you realize, and what I'm trying to show you is, well, you enter all the trades the same, but the logic and the strategy behind it is significantly different. And then ultimately you should be able to do everything: scalp, spot, swing, trade, position, carry, all of it. And that's the message to me is far more important about, Because look, there's only 2 trades on my coaching account. Like that doesn't pay the mortgage. You know what I mean? But what I'm trying to share with you does. Okay. All right. Let's handle the next question. Okay. Galactic Cruiser says, Wayne, if the dollar remains strong, okay, I just want to keep it there. What makes you think the dollar is strong? You see, right off the bat, I'm going to challenge you. You're like, well, it's been up for 3 days. I don't give 2 hoots about that. Okay? The dollar is going to be totally worthless. It's going to go from 99 all the way to 0. Okay, not today, not this year, not even this decade. But it's inevitable because it always happens, and it has always happened throughout history. And we're behaving the exact same way as all other humans have acted throughout history, where you become the reserve currency and your debt increases and increases and increases and increases and increases and increases to the point where it totally collapses on you and it's the end of your reserve currency status. Well, so Galactic Cruiser, this is the US dollar index. Okay. Now, it's not the index that you read in the newspaper. This is the US dollar relative to the euro and the pound and the Kiwi and the CAD and the Aussie and the yen. Okay. So it's created. Okay. So I would say in general, looking at this daily chart, the trend is down. So at this point, I am still looking to sell the US dollar. And then you can wrap some seasonality around this and say, well, when in the year does the dollar tend to get strong? When in the year does the dollar tend to get weak? Okay. Or is it inconsistent? Because it got strong back there. Here's 2024. So a year ago, dollar got super strong right around now. So maybe that's happening. Okay. But I need you to make that determination before you say, okay, dollar's strong, blah, 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 blah. I'm like, well, let's do a deeper dive. You need to tell me, okay, double bottom, okay, and you're taking the higher low. And what you're anticipating is up, down, up, down, up, down, up. Okay. Similar to this. Okay. Basically around October, which is where we are now. You get a change in direction. And this lasted all the way to January, which is, okay, the direction is not seasonal, but the top is. Okay. So in a scenario like that, you have to say, okay, is that typically risk on or risk off? And if it's risk off, what are the other assets doing and what is creating this? Could be the presidential election in the United States of America. What do you think? So, are we going to have a similar move this year? So there's multiple questions here. So for this to be going up so strong, you would probably see like the stock market falling. See what I mean? You remember the yield on the 10-year T-note at this time? I do. 3.75. Which means the stock market was likely not bullish and the bond market was bullish. Okay. And then there's the next move. Okay. So now you say, okay, well, do you expect the stock market to fall, the economy to collapse? Wait, the Fed's cutting interest rates, bro. All that kind of stuff. And so if this was politics, are we going to have a similar move this year? I'm not in that camp. So I might think this is about to happen. I want to sell the dollar, and I love the fact that the dollar was strong over the last few days. So WWWD, what does Wayne do when the dollar's strong and I'm bearish? Well, I sold it here and I tried to sell it here. Why? Because my fundamental bias says, oh, look, the dollar's strong. That doesn't make any sense. I'm going to sell it high. And I did. Based on what? I don't think we have the political situation that we had last year. I don't think we have the monetary. So we have we don't have the risk of the election. We have a different monetary policy. We have a different fiscal policy. We have a different trade policy. There's nothing like last year that is similar to this year. So I look at last year and I'm like, yeah, actually, that makes sense. What happened last year makes sense. It's just not normal. In fact, it only happens every 4 years in an 8-year political cycle. And not every 4 years, but every 8 years. Oh, well, I discussed that at the time. And having the dollar behave the way it did back then made sense in that moment, but, at least 75% of the time, no, actually, that doesn't make any sense. And that's abnormal, but it's logical. And so are we going to have a scenario like that this year? I don't know. I don't know what it's going to happen this year. And this year is different. We do have different trade policies. We do have different geopolitical risk. We do have different monetary policy and changes in monetary policy. It's nothing like last year. But looking at what normally happens and using sort of my macro thought process of what should happen based on our macro scenario, I think it's highly unlikely to repeat last year's 4-month bull run in the US dollar. So if it's strong for 2 or 3 days, I'm going to drop it like it's hot. Oh, it's so good.